Well, some nice news from the Fed today. They decided not to hike short-term interest rates. Mike Giordano, our financial expert with Williams Wealth Management, joins us now. Time for Mike on the Money. So, Mike, anybody who's looking to take out a loan might be relieved to hear this today, but help us understand, what is the Fed thinking? Are they still going for that 2% inflation mark, or why are they leaving it alone?
Yeah, they still want to get that 2% inflation mark. This all comes down to patience, Jane. That's what the Federal Reserve's trying to say. They're like, we've done a lot. It's been about a year since we did our last mega hike of 75 basis points, but we're not sure we've done enough yet. So we just want to maintain patience, watch out what's happening. It's kind of like if you're driving, you just kind of want to have your foot firmly on the brake. You don't want to slam on the brake and then spin the car out, and you don't want to take your foot off the brake and then run in the car in front of you. So you just want to maintain a firm stance on that brake, and that way you maintain optionality.
Okay, we've had all these increases, boom, boom, boom.
Yep.
So 2, we're not doing anything for a while is fine. Any expectation they might lower the interest rate?
No. That's it. No.
That's a quick answer.
No, the market's expecting them to do a couple of cuts next year, but Jay Powell today, the Federal Reserve Chairman, was basically like, we're not even thinking about cutting at this point. The first thing we're trying to do is make sure that we've gotten restrictive enough to get the demand down so that we can get back to that 2% inflation target. After that, we'll figure out how long we need to keep it there, and then the next move after that, we'll figure out when we want to start cutting rates, but he said they're not even thinking about it yet.
Yeah, it might even go up in December.
It could.
Well, we'll give them time for that. Okay, so to the markets, what are they reacting to? Last week we saw some really deep declines.
Yep.
This week we're seeing some really huge jumps. What's going on?
Yeah, it's a couple of things. Number one, you saw interest rates really spike up. Those long-term interest rates, 10-year Treasury bonds, spike up over the last several months, and they act as financial gravity. So the higher bond yields go, the more it puts pressure on things like stocks. So that was one big factor. The second factor, and I was writing about this over the weekend, is basically you've had these mega cap tech stocks that have driven the market all year long. They're such big companies, they can drive the market up and they can drive it down. So they drove it massively up over the first 8-9 months of the year. But their latest earnings release, these are like A students, and they delivered like an A minus. So it's not bad. It's still great. It's still an A. But when you're expecting an A, no, they didn't meet expectations, and that's kind of what happened. Market started selling off a little bit off of that.
Okay, so what does any of this change the investment outlook in terms of what you're advising your clients?
This is the million-dollar question. Yeah, and this is what we talk to clients about all the time, which is, we had this ultra-low interest rate environment for like 15 years, and the question is, are we going back to it, or are we going to go back to a more normalized environment, which is kind of where we are right now. So it doesn't really matter what actually happens in the future per se. Right now, you're getting a lot more optionality. You have the option now to buy bonds and get 4.5%, 5% yields. So it gives you more tools in your playbook. If you're a football coach, you now got a passing game and a running game. Stocks and bonds can both help work for you.
Okay, some people were asking you, who's the skunk? This is so much fun. We were so excited to celebrate your baby Margot when she was born in July. Your other 2 children, Theo and Ruthie, are just so precious. So we want to share with our viewers your happy Halloween.
Gosh,
isn't that absolutely darling? And your beautiful wife, Melissa.
It was wild. I thought I was in disguise enough, Jane, but I'm out there and people are asking me, hey, we love the segment. We love you. We love Gabby. We love Jane. We love the banter, the interaction. What do you think about the markets, interest rates, Powell, all that kind of stuff? And I was like, wow, maybe next year I got to go a little bit more, incognito. But I think that was the first time ever somebody was asking for financial insights from a skunk.
But that wasn't you saying the markets stink.
I did not say the markets stink. No, that was good, Jane. Wow, you're headed to who does the Tonight Show these days? That's where you're headed next.
We just needed to share your.
I only gave good insights to people who actually gave me a full-size candy bar, though.
Okay, full size next year. We'll be right back.